Volume profile is the crux of my trading. I use it for overall context, higher time frame levels, entries, and targets. So it's literally the backbone of my trading. So in this video, I'm going to run you through, number one, how I draw up these levels every single day, a sort of daily routine, what I'm drawing up, what I'm looking for both high time frame levels and for entry levels. Plus I'll share my settings as well. And then secondly, I should tell you about the volume profile and how I use it for context in determining true premium discount and true support and resistance. It's not based on anything ambiguous, not based on any visual candlestick patterns. It's based off real data, real volume, real transactions. Okay, so there's proper logic behind the volume profile. So let's get right into it, guys. Here you can see this is TradingView. This is what I use to mark up my charts for the volume profile. Okay, so we'll clear all these levels here, start from scratch. So if you have TradingView open like this, first of all, make sure your time is set to New York time. All right, always set to New York time. It's going to be important very soon. And then make sure the time frame is on the 1 minute time frame. Time frame is not hugely important with volume profile trading, but the reason I have it set to the 1 minute time frame is because the way TradingView calculates the volume profile levels is a bit funky. So you need to have it on the lower time frame on the 1 minute to get the most accurate tick levels. If you do anything different, it's going to give you slightly different levels. You need it right on the 1 minute chart. So we're on the 1 minute New York time frame, and depending on what you trade, I personally trade gold. So this is gold futures. And what I'm doing every single day, I'll show you the settings for this, but if you come down to the side here in TradingView, 1, 2, 3, 4, 5, the fifth option down on the left-hand toolbar, expand it out, and down here under volume based, you have fixed range volume profile. That's what I'm using every day, okay? And what I'm doing is I'm drawing a profile from the most recent regular trading hours session. Now, regular trading hours session is 9:30 to 4 p.m. New York time. That's the regular trading hours session. It's when the most volume transacts. All right, no matter what trading session you trade, you want to draw your volume profile across these times. So I trade the Asian session and the London session, but I still use the levels from the regular trading hours to trade from with great success. So if we draw it, so if we look now, we're at Thursday, October 3rd. It's currently 6:23 p.m. So the most recent session was Thursday's regular trading hours session. So I'm going to jump back here to 4 o'clock. That's where I start the profile, and I draw that right back to 9:30 a.m. So we have 9:30 a.m. to 4 p.m. of the most recent regular trading hours session drawn out. It's probably going to look a little bit different from yours right off the get-go, so pause the video here. These are the settings I use. Okay, first of all, copy the inputs. All this does is shows you all the data, all right, so you get more accurate levels, and then make sure your value area is set to 70, and then this is the style I use as well. If you like the way mine looks, that's the style settings I use. So copy those. Those are my settings. Pause, screenshot, whatever you need to do. So that's the first one. That's your regular trading hours session. So every day I'm coming in, first of all, marking this out, and then you'll notice on the volume profile, we'll run through the logic of this very soon, but you'll notice on the volume profile, we have sort of a non-shaded area. We got a kind of faded area here and here, but then we have a bright area here in the middle with the red line. So what I'm doing, first of all, with the red line, we're marking that across with a horizontal line, extending that out into the current trading day, and this is called the point of control. So I have a template saved for that. Point of control. Doing the same thing for the very upper end of the range here on the volume profile. You can see the upper end, but just before it goes to gray, I'm marking that, and that is our value area high, or VAH. So I'm marking that, extending that across, and then down the bottom of the range here where we get the last bit before it gets all shaded, doing the same thing and marking that with the value area low. And these levels will be valid all the way through till the close of the next regular trading hours session. So make sure you're drawing that on the 1 minute chart and then annotating those forward from that point, 9:30 to 4 p.m. New York time. Now, next, I'm looking at the weekly levels. So I do this at the start of the week and I leave them on the chart, but because we don't have them here at the moment, let me show you. So if we're currently Thursday of the current week, we're going to need to jump back to the previous week. So I'm scrolling back Friday of the previous week. So the previous week closed at Friday, 4:59 p.m., right? So that annotates the end of the week. So what I'm doing to get weekly levels, my higher time frame levels, if you will, is drawing a range now, just like we did for that daily one, but from 4:59 p.m. on Friday of the previous week, and extending that all the way across, all the way back for that whole previous week to where the markets opened at Sunday at 6 p.m. and drawing that across. This is now the previous week's volume profile. And what we're doing here is the same thing as what I would do for the daily levels, but now obviously using a whole week's worth of data on the previous week. So again, the upper end, that is our previous week's value area high. Now I have that annotated in orange just to differentiate it. Then the point of control, same thing, dropping a horizontal line, and I've got templates saved, previous week's point of control, and then at the lower end here, previous week's value area low. Then if we jump back to the current day, there's a level. So I leave those weekly levels on the chart as well, all the way through to the end of the current week. So once Friday closes at 4:59 p.m., I then remove the old weekly levels and then draw out the next weekly level, okay? So it's always the week previous to the one we're currently on. So that's what I'm doing when I come in every day to trade. I'm getting these levels, putting them on the chart. Now let's talk about context, what these mean, how do I use them, etc. So let's do a quick drawing just to make an example here. So we have our volume profile. Okay, so it looks something like this, and then say this line here indicates those kind of shaded areas. So that's faded out areas we saw before, and this area where the highest amount of volume traded is point of control. All right, so a bit crude, but bear with me here. So volume profile shows what has transacted in the market across the range that it's been drawn across. And the volume areas annotate which prices have the most amount of transactions occurring. Okay, so the higher the volume at a specific price, the more amount of interest from buyers and sellers we have. So the area here where we have point of control is where the highest amount of volume transacted, means we had the most amount of people interested, but from both buyers and sellers at this particular price. Say for example, 743.6 is where this is. So point of control, because both buyers and sellers want to engage at this price the most, point of control is what's considered fair value. It's true fair value, okay? There's not fair value gaps, not random squares on a chart from different candlesticks that mean nothing. It's real fair value, okay? Which is where actual transactions are occurring. Buyers and sellers are fighting over this price. This is true fair value, okay? No questions asked. So if that's fair value, the upper portion that we mark, which is value area high, is considered premium or expensive. That's a real premium price. Same with the lower portion, value area low, that is considered a discount or a cheap price. So using the volume profile, the closer we are to value area lows, the cheaper price is, meaning I would be anticipating longs from around this price. Vice versa, if we're trading around value area highs, price is expensive, I'd be anticipating shorts. There are scenarios where in a strong trend, a value area high will be broken and retested for price to continue going upwards in a strong trend, and vice versa for value area lows. But most of the time, in most conditions, value area highs is your premium, where you can anticipate shorts. Value area lows is your discount, where you can anticipate longs, and I'll show you real examples of this in a second. And point of control is just considered fair value, so you can use that as a target. Say if you're going long from discount, value area lows, point of control can be a good place to take profit because the market has returned to value, meaning if the bearish trend is to continue, it is a fair price for sellers to step in and start to sell that back down, okay? So it can be used as a good target in that sense, and vice versa from the value area high. If you're shorting, point of control is a good target as well, because that is again fair value. There are more intricacies to the volume profile like this, but this is the basic overview of what it is and what I'm looking for. And you'll find that these levels, value area high, point of control, and value area low, act as true support and resistance. You'll almost always get a reaction from these levels, and these areas act as true support and resistance. So they'll either hold price, or if they break, just like we were taught from the very beginning in trading, support once broken turns resistance, and resistance once broken turns support. The same theory applies to the volume profile levels as well. So that's enough scribbling on the chart. Let's jump down to the actual price action now and have a look at some examples here. So let's remove the daily levels and let's just look at the weekly levels for example's sake here. Okay, we go back to the start of the week. Okay, this is where we opened up. Sunday's open. We had the previous week's levels on the chart. So what do we see here? At point of control, we're trading around fair value relative to last week's price. We break below, okay? So we've gone from fair value, now we're trading down towards discount. We get down to discount, we get a very small reaction down there for about 20 ticks movement to the upside, but then it breaks, retests, and we keep dropping, okay? Dropping, this is what I said earlier about support turning resistance. So that's what happened initially to start the week. We broke through value area lows. We're trading at a discount. However, sellers liking this price and are selling at value area lows, okay? Support turned resistance. Then Tuesday comes around and now buyers are stepping in after making the low of the week. Buyers are stepping in we break back above value area lows, come back, almost retest, push back to fair value. So now we're trading up at around fair value. For you ICT traders, you want to call that equilibrium. We're back to point of control, back to fair value, okay? And we dawdle around that area. You get tests on both sides. I don't like to enter at point of control too often because we're at fair value. It's often a noisy point to trade from. However, you do often get good scalp from point of control. I prefer to trade personally from the value area highs and lows because they're the extremes. The point is we traded fair value. Overall, sellers are keeping us below fair value. Okay, it's a seller's market. Every time we reach fair value this week, we've been pushed back down again. We get an almost perfect tap at point of control there, and then finally we trade back down to fair value. Now look at this. This was just on Wednesday, a perfect tap. Once we've come down to previous week's value area low, so a cheap price relative to last week once again, and we're testing on the upside here, we get only 2 ticks worth of drawdown if you to enter right on that level before rotating all the way back up, basically to previous week's fair value again. And then we've come back down here. This is Thursday, just yesterday past. Every time we visit previous week's value area low or discount, we get 1, 2, 3, 4 taps where price has a bullish reaction from the previous week's value area low and rotates back up near to fair value. So you can backtest this. The same theory applies on the daily levels. You'll see that if you follow my daily trading email, you see I trade from these levels every single day, the weekly and the daily levels. The daily levels, the same theory applies. You're trading down to value area lows. That is a discount I'm looking to or anticipating longs if we haven't broken properly and retested the other side. I'm anticipating longs. Price is cheap. We're trading at point of control, fair value. I'm anticipating chop before seeing which direction, who's in control. If we go down, sellers are in control. If we push up, buyers are in control, okay? So I'm looking at that. And then vice versa, at value area highs, I'm anticipating shorts. Okay, we're trading relatively expensive. I'm looking to get short. That's how I use volume profile, okay? So it gives me context to know if we're relatively cheap or relatively expensive, or if we're trading at fair value. Gives me an idea whether to anticipate longs, shorts, or chop. And I'm also using the levels as true support and resistance. Okay, value area lows as support, value area highs as resistance, and point of control as a place to take profit and potential resistance or support, but you'll tend to get a bit more noise around that level because fair value is where buyers and sellers are more likely to argue and fight for price until the true victor comes out on the other side. So I'm literally trading this every day, guys. I get a lot of questions about volume profile, and I just wanted to make this video to show you how I mark things out. And number 2, the logic behind how this works. It's quite simple, guys. Talking about it's quite simple, all right? It's not hugely complex, but it's based on real data, real transactions, real volume. We're not just taking a random candlestick and drawing out a rectangle and saying this is a discount, fair value, gap imbalance. There's no logic behind that, guys. It's just a picture on a chart, okay? There's no data behind these things. So volume profile gives you real data so you can actually see where traders, algorithms, etc. are choosing to transact, which prices are most attractive, what is considered expensive, what is considered cheap. It's all based on real data, real logic, and no conspiracy theories involved, guys. So that's a quick overview of using the volume profile in context. I hope you found this helpful. Please put in the comments below what you want to see more of on this. I do trade this every single day. If you follow my daily emails, you'll see me getting setups from these levels every single day. So the link in the description for that daily email, it's totally free. You can see it's like a public trading journal, basically. I'm also getting into more live sessions now at about 11 p.m. Eastern time during the Asian session. So you can check that out there. Otherwise, comments below what you want to see regarding volume profile. I would like to make more helpful content around this. There's not a lot of content on this on YouTube, so I'd like to expand further on it and order flow and help you guys understand how to use this and implement this in daily trading. So I hope you liked the video, guys. Thumbs up if you did. Again, comment down below, and I'll see you guys in the next video.